Good afternoon. Welcome to Options Tender. It is Tuesday, October 29th, 2024. Welcome, traders. We're looking at Qs, the triple Qs, going into tech, earnings, big tech. So we're going to check out the Qs on multiple time frames, and I want to compare SPY on the monthly. Spend a little time on that, and where do you think this is going, and compare the two charts. And the reason why I think these are kind of aligning together. So we're doing this intraday, about 1 p.m. Eastern Standard Time. If you're interested in getting these videos intraday, then consider becoming a YouTube supporter. That's a YouTube member. The Patreons, they still get the... I try to send the videos. I'm trying to work that out, but YouTube does not coincide with other companies very well, and so you do still get trade alerts and everything. And the Patreon was designed to support the channel, not all types of necessary benefits, but I'm trying to get now that YouTube has memberships, trying to get everybody over there if you're interested. It's cheaper too, so that's the incentive. But I appreciate all the support. I know one gentleman said that they're gonna be both members anyway, so super appreciated. So let's jump into it. We have the Qs on the monthly time frame, and if this information is just too slow, you don't have time, speed this up. Go to that gear wheel and speed the play up to 1.25 or 1.5. It'll get you a lot of information. You can watch a lot more videos in a shorter amount of time. Okay, so we have the Qs 2000 top. We have our 21 top, and we're working on the top right now. I do think the top is in for the Qs. Even if we, with tech earnings, eke out a new top, we're just going to create more divergence. So what I think is happening here, we already have negative divergence on the MACD, RSI, slow stoch, all the above. Okay, so on multiple time frames. So what I think ultimately, I don't think I have anything on the Elliott look here, but ultimately I believe that the Qs were started here, okay, had this ramp up and just a massive move to the downside. Now I believe that this 1, 2, 3, 4, 5, and this whole structure is done. Okay, so what I want to do is create, this is fine, I'll use this one and rename Elliott Wave monthly, and get rid of that. Okay, so I think that we have a 1, 2. Oh, you know what? I already started doing this. I see now. Sorry to take up your time here. Forget about this. Just imagine this is a 1, 2 in red, 3, 4, and we're at 5. Okay, so I think this wave sequence is complete. I think that the retracement, and I'll get this more exact later, we have a nice sharp, and this is going to be a wave 1. After this huge completion here, you have a wave 1. Okay, so I think this retraces, and this is in log scaling. And so at minimum, I think we're coming down to the 205, possibly down here to the 786, which would surpass this 200 monthly moving average. I'm not sure that's going to be the case, but if it does, that would be testing those 2000 high here. Okay, now what kind of strengthens this argument is SPY is in a very similar situation. Okay, so you had a flat pattern here. You had the top in 2000, 2008. Well, with this being a wave 4 wave pattern, I believe that the sequence right here is over. So you can consider this a wave 5, but I think this is just going to extend from this wave 4 structure. So I think this is going to be a 1, 2. All right, and again, 62% retracement that goes right in all this volume here for the this Corona crash, We had 2018, all that's in there. So a lot of volume in there. That also coincides with the 200-month moving average at that point. But if price wants to go lower, I'll consider this. The 786 is retesting the highs here, okay? It's not unusual for that to be very sharp, a very sharp move here. And that would be the lows over here in 2015-16. All right, so what I would be looking for in both these situations with the Qs and SPY is a zigzag, okay? It's very common for a wave 1 going into wave 2 to go to correct as a zigzag, which is a 5, 3, 5. So ultimately, we're gonna count this out through time. We're in the infancy of this move. Infancy. We haven't even scratched the surface. So 1, 2, 3, 4, 5. I don't know how to look yet. We'll have to watch that through because the 1 could be short and then a 2 pullback, then just a massive move to the downside in wave 4 and 5. Okay. So and then we'll have a almost a bull market type correction. And then we do it again where that next move could be much larger. So this could be a shorter zigzag. They could be equal A to C. There's so many options there, but usually this will be an impulsive move, a correction, and then just a complete washout would be typical, all right, of a move here. So I don't know if I have anything to compare that with right here, but I'm not going to waste your time. Let's just go through the rest of the Qs. That's what I'm looking for in the higher time frames. Okay, so the weekly, again, that's the top there. Top here, we're oscillating around that top from 2000, back above it, and we're playing with these breakdown candles highs right here. And this could be a hangman doji. We could in the week. This could just be we could get the rest of the week to be red and engulfing. So we'll see what happens with the earnings. Most of the earnings are happening this week, so we might not go anywhere. Maybe Google is bullish tomorrow, while for example, Apple. I don't know who's next. I have to look. Apple is bearish and pulls the stock down, and then Amazon is bullish, and everything goes nowhere. Okay, so we'll have to see what happens with that. But in my opinion, just like SMH, this is a 1-2. Now, if this ekes out a new high here, which we're so close to that, if it does, no big deal. It's the same thing, still the same setup, because we'll have negative divergence here again. All right, so I'm not worried about any upside. This is not going to take off and just start getting out of hand and breaking out to the upside. That is not on my radar. Okay, so on the weekly, Elliott, what did I do with that one? Oh, I completely just renamed it. Okay, so this one, what we did was we had this correction here on the weekly time frame. We were looking at this. We had the correction, and then we had the targets, and that is misinformation there. So here is what I was talking about. We had this correction from 3 to 4. You can see I do this on the fly. I don't do a lot of the prep before these videos, just so you're aware. I do most of this with you guys so we can learn at the same time. So with this retracement, sorry, it's going to be busy in here. We got past all of the retracements after this correction because we weren't sure if this was a 5-wave move, impulse. And then we're looking at correction. We got past, okay? Got past new highs, retested after hitting the 127 retracement, 127% retracement from this move here, okay? back tested the former all-time highs, and then went directly to our last target there at 162% retracement. So now we're kind of back testing that situation. We're going back to test to see if we can make new highs. All right. So that's all that's happening here. I think this is a bear flag in that we continue lower. So we hit all of our targets, major target right there. Let's go down to the daily. On the daily time frame, we had this bearish rising wedge. We're still in it. We haven't broken anything down yet at this point. We had a fake break, a throw over, and then a rapid move to the downside because of that. Okay, that's very bearish. Okay, now I think we have an A, B, C correction to where this is a three-wave move for an A, B. I mean, you can consider this. It looks like a flat pattern, but this could be a zigzag. I think this is an A, B, C for an A, B, and then a 5-wave move up for C. Okay, 1, 2, 3, 4, 5, being a ending diagonal. All right, so you had your breakout from the triangle, moving on up, and at this point we're still above the 8 EMA. Okay, so that we're in a bullish stance, but we're going to see what earnings does here. We had a possible reversal candle, has not been negated yet. Even though we have an engulfing here, has not been negated. We'll see if we can make a new high above here at 500, but we're still in a lower high situation here. My guess is that we break down starting tomorrow, but that might not be the case. Again, we might have a weekly candle that just is side by side with the tweezer top here and then moves to the downside. Okay, bearish divergence already in on the daily time frame, and if we eke out a new high here above 500, it creates more divergence. So it's just the time is running out to be bullish. That's all there is to it. Time is running out. We have a daily. Here's another look at those retracements. Hit the target up here at the 162, and we had our impulse 1 down here. We have an A, B, and then we knew price was going to go up. We didn't know how far it would go up. We became bearish here, and then price kept going up, and then we started shorting again at this point. So holding on so far, but I think we're getting really, really close to this move to the downside. So in my opinion, this is a 1-2 setup on a much higher time frame. And again, if the SPY Qs seem to be in the near term relatively stronger than the market. So if it ekes out over 503, still considered a double top, then the count will start over, okay? And then we'll start over the count into a 1-2, and then it will match with the overall market a little bit better than this being a 1 and a 2 starting off, while SPY hasn't even started its move yet. So it doesn't matter which route it goes, but that's what will happen if we eke out a new high here at 503.52 or whatever the top is here, 503.52. Yep. If we got a new high, we just start over with our count. Simple as that. And let's go to the 65, and we'll end it there. On the 65 minute, here's our chart here. Impulse wave in our opinion. ABC. Still in a flag pattern. Even if you make it up to the top here, it's still a double top and not quite making a new high. So might take a couple days. Maybe it's Apple or one of the later ones on Thursday that are more bullish and create a new high here and maybe we throw over. Don't know if that's the case, but that's what we'll be looking for. Either way, we're close to the top, in my opinion. This one looks like it's just finishing off a last wave here. 1, 2, 3, 4, and maybe eke out a new high here at 5. All right. So in a traditional sense, we're just filling out the wedge. Still could go up a little higher. Negative divergence all day. And if this makes a new high here, we'll just stretch this negative divergence. There's nowhere to go. And then you'll have another divergence here in the RSI. So we'll see what happens. Going into tomorrow, we're oversold on the slow stow. And then on a Elliott fib look here. Again, we think the top is in, or it could be moved right here. And then we'll start our count going in the future here. So we don't have any measured moves here at this point because we don't have any market structure. All right, so the market, if it makes a new high, we have to start all over again. Otherwise, this could be a 1, 2, a 1, 2, 1, 2, whatever. Excuse me, 1, 2. Meaning, sorry, I don't want to get too far into this. It's all speculation. A 1 and then an expanded flat. But we're so close to the high here. I imagine we could eke that out here today, going into the end of the day, and then we'll have to start over with market structure. Okay, this could be just a sharp move to the downside, and you won't be able to see any waves through it. Depends if we get a gap down or whatnot. But see, look how sharp that initial wave is. You can't see any waves inside of it, but that would be considered a impulse wave for us. Okay, so that's about all I got. It's up to earnings now. That should be a pretty crazy volatile situation. I think the move to the downside starts this week, but if not, then we have to look for it to happen next week. We're already in full steam ahead on the bearish with shorts and everything. So all the way out to January. All right. Thanks for your time, you guys. Don't forget to like the video, subscribe, and we'll talk to you tomorrow.